Good morning, everyone. Welcome to the TradeXchange weekly recap and week ahead webinar. We are recording this, as we mentioned before, for everybody. We know it's a holiday weekend and a lot of people are not able to join this week. So we are going to be recording this, posting it into the news desk and on our social media pages. Just a quick recap of last week. 6 months down, 6 months to go for the year. It's funny that the old adage, sell in May and go away, seems to be the right move for now, as we have had the worst first half of the year since 1970. Last week, we saw the 11th week out of 13 to close lower. And on the minds of the everyday American, the gas continues to be on everyone's mind going into the 4th of July weekend, with average prices around $4.85 compared to last year at this time, which was around $3.10. On the crypto side, crypto continues to be on some traders' minds as well, as Bitcoin breaks below 20,000 again this week, hitting levels of 18,000 today. In November of last year, Bitcoin was trading over $60,000. So we are seeing that volatility in the crypto markets as well, catching headlines across many news feeds. So we keep a close eye on that on our side. We had some data on the US manufacturing sector growing at its slowest pace in 2 years in June, and some comments out on the conference board where traders believe a lot of the weakness this week was initiated with the conference board coming in much lower than expected. And in some areas, activity hitting levels not seen since the height of the pandemic. So we're keeping a close eye on that. We're keeping, as we've been mentioning for the past few weeks, so we're closely watching these commodity prices as a indication on inflation. With the recent weakness in commodity prices, we are anxiously waiting to see if that has any impact on the inflationary numbers, and if that has any impact on any of the future decisions by the Fed. So that's just not much action last week. We are going to go over the week ahead this week as well. I'm not seeing much action as well, especially with the shortened week with the July 4th celebration on Monday. We know markets are closed on Monday. On Monday, though, we do have the Japan and the China PMI composite final. On Tuesday, we're watching the US side, some motor vehicle sales. We have the Australia RBA announcement, excuse me, Germany's EU and the UK PMI composite. We also have the BOE financial stability report and the Sun Valley conference, which lasts until July 8th. On Wednesday, on the US side, we are watching the JOLTS data as well as the FOMC minutes. On overseas, the EU retail sales. Thursday, Germany industrial production, the EU ECB minutes, Japan household spending, the G20 meeting, and we do have the Fed speakers Waller and Bullard speaking. We believe this week is all about Friday. We have the employment report on a Friday morning at 8:30 a.m. Eastern time. We also have consumer credit, and we have Fed Williams speaking. So we do believe Friday will be the most important day on the week in regards to economic data. Friday, as well as the Canada Labor Force Survey, China's CPI and PPI, a G20 meeting, and the French Davos meeting. So when it comes to economic data, even though it's not filled this week, we do expect activity going into the end of the week, with Friday being one of the most important days on the economic side. Company events, Monday, nothing on the agenda. Tuesday, we just have Ford's auto sales. Wednesday, nothing on the agenda. Thursday and Friday as well, not really much on watch this week in regards to specific company events. Company-wise conferences, as we can see, typically this is filled on both sides. This week as well, another slow week in regards to conferences. As always, members, if anyone has any questions about these conferences and we do have any updates, You can shoot us a message on Ask the Desk if any specific company is presenting during any of these conferences. Economic calendar for the week. Monday, as we mentioned, markets are closed. Tuesday, we're going to be watching the factory orders at 10 a.m. The investor movement index does give us an idea on some activity on by traders, but the key thing we're watching on Tuesday is the factory orders. Wednesday, we have John Williams speaking at 9 a.m. We also have economic data points, the PMI composite, ISM services, the JOLTS job openings. As everybody knows, the JOLTS job openings was Fed Yellen's key, one of her key economic data points she used to watch when she was the Fed chair back in the days. So we always do keep a close eye on the JOLTS job numbers, which will be coming out 10 a.m. on Wednesday. But we also have the FOMC minutes at 2 p.m. Eastern time. We'll get a better indication, even though this is a previous look to the last meeting. We'll do get an idea of what some Fed speakers' mindset is going into hopefully the July meeting. On Thursday, we have typical, the initial jobless claims, the EIA natural gas report, the petroleum report is moved to Thursday due to the markets closed on Monday. And we have Fed speakers in the afternoon, James Bullard and Chris Waller. So Thursday, we'll be watching the Fed speakers in the afternoon and keying on the EIA petroleum report at 11 a.m. and the international trading goods at 8:30 a.m. Friday, as we mentioned, is one of the most important days of the week on economic data-wise. We have the employment report at 8:30 a.m., a Fed speaker at 11 a.m., John Williams, and then the consumer credit at 3 p.m. A lot of traders in the past, we never really focused on the consumer credit, but with now these inflation headlines and the talk of recession, interesting to see how the consumer credit side is doing moving forward. Next up, we have a quick breakdown of the weekly sector performances. This week, we did see strength in utilities, energy, consumer staples, and healthcare. Weakness across the board, as we know, has been the talk of the town. Technology, consumer discretionary, are the weakest. We also saw weakness in financials. We'll be going over that later, since we do have their earnings coming up as well in the next few weeks. Top earnings for the week, nothing on Monday. Tuesday as well. Wednesday, we just have a few after hours. Thursday, we'll be watching after hours, Levi, LEVI, and WDFC. And Friday, nothing on the agenda. As we can see, earnings-wise as well, nothing, not much on the agenda. Seems like a slow week outside of some economic data points. Indice comparisons, we did this week, we did a comparison on the 3 years, comparing it back to the initial COVID drop. Markets still trading above basically those COVID levels. So, when we talk about the weakness recently in markets, we are basically trending back to levels seen prior to the initial COVID drop. So, the question comes down to, is there more on the horizon? Who knows? But as of right now, we are still basically above COVID level areas on all of the indices. The target rate probabilities for May continuing at around 82% of a 75 basis point rate hike. Your 10-year constant maturity minus 2-year treasury still positive, up spot 0.04. Traders are keeping a close eye on this number if it does hit the negative side, as that is a recessionary indicator. Year-to-date percent returns for the weekend. As we've been talking about, we've been seeing that weakness in commodities. Heating oil dropping about 17% to 69.96%. The VIX, small drop to the lows. Even though we did see weakness this week, the VIX really has not seen any upticks. Nat gas down 15%, crude oil down 3%. Corn, one of the only ones that saw an uptick, corn actually up spot 2%. Wheat down 10%. Coffee saw a little strength. Gold lower, platinum lower, cotton lower. Silver, which was one of the weakest commodities as of late, continuing its weakness, down 15.5%. Copper as well, down 18.65%. So we did see continued weakness in commodities, and we'll keep a close eye on if that has any impact on any inflationary measures. The AAII Investor Sentiment Survey. One interesting aspect that we've noticed is the bearish mindset has dropped to a more neutral and bullish mindset as of June 29th. We'll see how that continues this week in a shortened week, but clearly the mindset right now is a less bearish tone to a more neutral tone in the Investor Sentiment Survey. Sector outlook, we added as well the 3-year outlook on that, on the sector outlook year-to-date percentage. Energy continuing its highs, correction, not its highs, but its strength. Energy up 13%, consumer staples green up 0.5%, and then we see the weakness continuing across all other sectors. Compared to a 3-year, we are seeing those sectors continuing to show green. Even the information tech up over 50%. So the strength is there on a more longer term. On a year-to-date performance, though, we are seeing weakness in many of the sectors. We do have some IPO lockup expirations this week. On Wednesday, we have CINC, HOUR, and VIGL. New expected IPOs. Keep in mind, this is just an expected date. We typically get the actual date throughout the week, but we are expecting ONFO. FDA calendar, pretty slow week on the FDA side as well. Monday, we do have ANEB, some top-line data due on Enebolo. Thursday, we have HCNPs, the PDUFA date for Krystexxa. Friday, we have BBIO, a presentation on BBP 812, IMMP, an abstract release on Eftelagimod, and RPHM, a data presentation on REN001. Saturday, we do have FRLN, an interim date due on FLT 180A. So that's the FDA calendar scheduled for the week. As we all know, throughout the week, we do have updates that is posted in the news desk. A quick look at charts, and then we'll go over a few updates to the news desk, and we'll open up to the question side. This is a quick look at the SPY Daily. A little more color on that SPY Daily. We mentioned the gap fill last week. We saw it hit that resistance level that we mentioned as well on that gap fill at this point. We added that another short-term downtrend just to keep a close eye on any upside breaks on this chart. As we mentioned last week, there was talk of a possible only a bear market rally, and we saw that weakness this week in markets closing below last week's high. So we're keeping a close eye on this SPY, trading right at those trend lines. As we mentioned, members, these trend lines we always mention if we do take off one or add a couple. These have been here for quite some time. We just added a few more on the downtrend, short-term downtrends that we're keeping a close eye on. Moving on to the SPY Weekly. As we mentioned, it basically closed at that level that we had from last week on the SPY Weekly. Looks like it's building a small little uptrend here. We're watching that on any downside break. We did add a couple of the upside and downside trends that we're watching on a technical basis. We did have some color posted on that SPY Weekly. But as always, we do mention to everybody, volume is key, and we'll keep a close eye on this more weekly trend set being built at this point. Another chart on a weekly basis with moving averages. We are seeing a lot of crosses to the downside, so we'll keep a close eye on what this week brings us. And then we have earnings, which will be the most important part of the weeks ahead. VIX Weekly continue to be in this range bound. Not seeing any huge moves on the VIX side, even though we do talk about it a lot. We're not seeing that much action on the fear index. So still in a broad-based, little range right here. We are watching on the downside of that 20 or the upside 35. In case any updates will be posted in the news desk. To 10-year yield weekly, we are watching. We added a few more in this as well as notated. We are watching that 2.8% support level on the downside. We added a small little uptrend, downtrend that we're keeping a close eye for a quick move to the upside. But we are watching 2.8% to 3% range. Anything above that 3.5% is that key level to the upside that we are watching keeping a close eye on. More color on that in the note. That is what the week ahead 10-year yield, another look at the weekly on the 10-year yield side, the HYG weekly. So the HYG is the high yield corporate bond ETF. We are watching this one as of late, noticing a little trend being built, a little range around that 73 to 75 level. Watching that point on any upside or downside move will be notated in the news desk as always. But as always, it is all about volume. So we'll see if any move to the downside or upside breaks on volume. We believe we could see another move lower on the downside to previous lows during the COVID heighten, and the upside could see a retest of recent highs on the 78, 70, 79, the $80 level. So we're watching the HYG as well, as it is one key ETF that we always keep a close eye on. Just to look at the triple Qs on a weekly basis, we are seeing a lot of, this is on the moving average side, we are seeing a lot of negative crosses, but keep in mind this is on the weekly side, so this is a more long-term view than a daily. We'll be adding a lot of members have asked to add some triple Q looks and more tech looks. We'll be adding that into our report, our weekend report moving forward. But we are seeing some sort of a little base trying to be formed at this point, and we'll keep a close eye on any break to the downside or upside on the triple Qs. So that's the week ahead, members. You know, as we mentioned, markets are closed on Monday for Independence Day, and typically on a shortened week, market activity is not profound. We are working into the summer doldrums, but we are waiting on Friday, one of the key economic data point weeks, with the employment report and consumer credit. Wednesday and Thursday as well, we do have some econ data on the agenda that we'll be keeping a close eye on. So we'll open it up to questions. Just a quick update on the TradeXchange side. We did mention that we'll be sending out our mid-year newsletter this week, hopefully by the weekend, on some new exciting things for our Trade Exchange members. We are working on a new, updated, much better Squawk service for our members. We're very excited about that. We have some new developments coming on that side, which will add a much cleaner, clearer, faster breakdown on the Squawk side, taking out all the noise and just adding headline-wise, market-moving headlines, option activity, and very important SEC breakdowns. As we've been keeping a close eye this. As of late, a lot of SEC filings have been moving individual stocks. So we're working on including a much more detailed SEC side, as well as a cleaner and faster Squawk for all our members. We are working on our community room. A lot of people have been asking about that. We are fine-tuning that. We want to make sure that it is set up properly for all our members, to build a Trade Exchange community of traders. So we are working on finalizing that, as well as a more integrated version of our TradeX Plus service. As we know, members, we've been mentioning, all our members have access to that. We are giving out during the summer free access to all of that for our members. If you are a trader on SEC filings or press releases, it's a great integration with the Trade Exchange service. So just reach out to us either through Ask the Desk or email to get access to that. That is open to all our current members, free of charge. So we'll take a quick minute or two. If anyone has any questions, just shoot them in the chat box, and we'll answer them up. Other than that, we'll try to finish this up sooner rather than later. So we'll go on mic mute, and if anybody has any questions, just shoot them in the chat box. Thank you. So a quick question is, what's the thought process for July on our side? So on our side, we believe this month we do have outside of the Fed, which starts on the 26th and reports on the 27th. Outside of economic data, we believe this month is all about earnings. I think we have a doldrum going into earnings. We have the bank earnings beginning, I believe, on the 14th of July. So we're waiting on the impact of recent market activity, inflation, gas prices on supply chains, on company earnings. We believe that will be the next indicator in market movement, and especially in the summertime. As a lot of people always talk about, they always say in the past, you've heard people say, oh, this is the most important earnings season. We believe this is probably one of the most important earnings seasons as of late. I think that this earnings season would get an indication in regards to how companies are faring against supply chain issues, inflation, gas prices, the consumer, and we'll get a better indication on the overall economic health. So we believe that starting in the mid of July with earnings, that could add a lot of volatility to markets, especially during the summertime doldrums. So that is what we're waiting for. That is what we're watching. Outside of the typical economic data points and Fed speakers, we believe the next market volatility point will be the earnings season, which is coming up in a couple of weeks. If there are any more other questions. Yes, Gary, in regards to the community area, it will be a separate room from the news desk. We will never, ever change the look of the news desk. The news desk will be the news desk now and until the future. It's the community room will be a separate part of the TradeXchange service just for TradeXchange members. It will be a community for ideas, thoughts, technical looks, and anything in regards to our members' views on the market activity, economic data, Fed speakers, but it will be a separate separate part of our TradeXchange news desk. It will not be a part inside the actual news desk. So just wanted to clarify on that side. But yes, the community area will be open to all our TradeXchange members, and it will be a community of like-minded traders in regards to ideas, thoughts, and market views. So that will be the community room, and that will be hopefully be open and released later this summer, going into the September timeframe when markets start to pick up again on a typical basis. Once again, members, if you have any other questions, you can always reach out to us via Ask the Desk, or reach out to us via email. We'll be around as always to answer any questions for our members. If there aren't any more other questions, I think we did keep this pretty tight as we try to do on a Sunday. We just want to wish everyone a happy and safe Independence Day weekend. Check the news desk as always. We're always up and running on any headlines. We'll be posted in the news desk. The Squawk will be back up on Tuesday. And if there aren't any other questions, we want to thank everyone for joining everything today, and enjoy. Thank you for being a part of the TradeXchange. And we are very excited for all the new things coming up. And if you have any other suggestions, comments, you can always reach out to us. We are available. Either ask the desk through the news desk or shoot us an email. Thank you everyone for joining us, and enjoy your Sunday and enjoy your day off on Monday. Thank you.